everyone, and welcome to the QFT show. This is the new show started by School of Market Studies, and I, Vineet Bolinchkar, am your host. And along with me is our guest speaker, Ketan Gohil. And uh, Ketan is the Ketan is a schoolmate of mine. Hi, Ketan. How are you doing?
Hi Vinith, morning. Good to be here.
And Ketan and I go a very long way, and we have done a lot of things together in the past. And Ketan has coined a new super indicator, which promises humongous profits for those who implement it. But it is purely from a learning perspective. आवाज बहुत फट रहा है.
Uh Wait, let me put you onto something. 1 second.
So Ketan, before we start off and reveal your tool to the world, uh, let's just briefly discuss about you, how you came about it, and can you tell us a little more about yourself?
Yeah, hi. Morning everyone. So basically, since our school days, I've been actively involved in the market, and very early on, I started tinkering with technical analysis, and over a very long period of time, I came across, of course, by everything else, by sheer luck and accident, I came across this super indicator, which was refined over a very long period of time. And what we saw is that this indicator works extremely well across all the markets or across all kind of tradable commodities, maybe bonds, maybe equities, maybe actual commodities. And what it does, it gives precise time and direction over very long term periods in the market. And today we shall be talking briefly about it. It's called super indicator, and hope you guys like it.
Yeah, so without much ado, Ketan, can you reveal the tool to us?
Okay, here we go. I'll share my screen so that everybody can see the presentation,
Yeah, sure, go ahead.
and we'll straight away jump to the first slide. Okay, so it's called the super indicator. uh, it's a proprietary system developed by me with assistance from Vineet. And let's start with the first slide. So here it is. At the lower end, we see the price chart of the 10-year, 2-year US Treasury bill. And on the top, this in the orange line is a super indicator. Now the way it works is there's a horizontal line at 800 level, and whenever the super indicator comes near the 800 line and crosses over or comes near and continues in the same previous direction, we get a predetermined time and price movement in the market. Every time it crosses over, for instance, it's marked here, the purple circles. Can you see this, Vineet?
Yeah.
Okay. So every time it crosses over or comes near it and goes back to its original direction, we get subsequent large moves in the market. Now, the
Okay.
way it started is I started putting it up on the US Treasury bill because it is one of the most biggest, most liquid, and widely held treasury bill across the world. The way it works is the indicator works inverse to the price. So here, let's say the indicator is going up from the crossover level from below to above the 800 level. The market does the opposite. So as we see, during this period, 2007 to 2015, the indicator did not do much. That is primarily because the price did not do much, as the Fed kept the overnight rates and the other rates at near zero. But once in 2015, when the indicator went below the 800 level, we see the price started moving down.
Ketan, I think you need to change something out here because I think you have inverted the oscillator. So what is happening is whenever the oscillator is going below the line,
Oh,
it
the
is giving
prices.
a sell
Oh, yeah.
signal.
In this, it is like that. Okay, I
Yeah.
apologize for that.
Yeah.
Here it works along with the price. In equities, it works opposite to the price because
Yeah.
here I had inverted it for the sake of convenience.
Okay.
Okay. So next we go to the US Treasury
So,
10 year.
can you go back? Let's have a look at the charts, please.
Okay.
So, viewers, if you notice, is that wherever the red line, which is the super indicator, cuts the horizontal line, and if you see in line with the blue marking on the stock price or the bond yield, you will see that they start crashing, right? Whenever the line is cut from below and going up, the price is moving up. So you can notice that this indicator has got extremely high uh, correlation to stock price movement, and over a period of, Ketan, when is this chart from?
This is from 91.
Yeah. So from 91, we've had very few instances where the market might have failed. So, Ketan, can you just tell us that this portion where I'm highlighting,
Okay. Which one? I don't see it.
okay, on your the last but one, which is in uh, the blue, the not the larger blue, the
2010 one.
yeah, 2010.
Okay.
So there the it has not cut the indicator. So why have you circled that?
Okay. Because it came near the crossover level of 800. As I
Okay.
said before, two things can happen with the indicator. Either it crosses over to the other side, for instance, like in 2007 8, like in present 2016 17, or here in 1999, or like in 2002 or 2010, it comes near the crossover level and then again continues in the previous direction. That
Hmm.
means whatever was the prevalent trend, you are going to get more volatility or a larger price move in the same direction. That means the price or the commodity is ready to move. For instance,
Okay.
here it came to in 2000 1996, it came near the 800 level. Here, can you see this?
Yeah.
And the price from here, it just moved back again a little bit.
Hmm.
Even though the indicator did not cross over,
Hmm.
price did move up because the previous trend was up, the previous
Hmm.
larger trend of the crossover.
Yeah.
Same thing happened here. Here we had the indicator going down, saying that maybe the price will go down, but it did not take the previous lows.
Hmm.
Once the indicator came back about the 800 crossover, the trend started and it led to a very large move over 1998 and 99.
Okay.
So basically, whenever it comes near the 800 level, it foretells us that please be careful in the market. There's going to be a large move coming, either
Mhm.
change of direction move or in the prevalent trend or in the direction of the prevalent trend.
Okay. So
Uh,
now tell me one thing. You just said that it comes in the prevailing direction or in the reversal. So it's kind of confusing. Can you be more clear about it?
okay. For instance, here in 2000,
Yeah.
we had a crossover buy crossover.
Yeah.
Okay. It went all the way up. The price also went up.
Yeah.
Then the indicator started coming down and came near the crossover level somewhere around mid 2002.
Mm-hmm.
That told us that either two things can happen. First is it tells us that there's going to be a large move coming.
Yeah.
Second thing is as long as the price stays about a certain level, for instance, this level,
Mm-hmm.
the existing trend or the previous trend, it is the uptrend, will again continue.
Okay.
Or if the indicator would have gone down along with the price breaking a certain level, then
Mm-hmm.
we'll have a reversal of trend. For instance, here in 2003, 2004,
Mm-hmm.
it came to the zero crossover level, 800 crossover level.
Okay.
It went just a little bit up, but the price did not cross the previous highs.
Mm-hmm.
And then once the low
Okay.
indicator level was taken out, it led
Mhm.
to a huge fall in the treasury market, over 10%, which in the treasury market is. very big.
Mm-hmm.
So that is what it does.
Mm-hmm.
Now, once again, if you take the 2010 example, after a huge rally post 2008 fall, the indicator came back to the crossover level.
Mm-hmm.
Price did not take out these lows. See, along with the indicator, there are several things which have to be considered. For instance, the main trend line has to be taken out, or the previous low or the previous high has to be taken out.
Mm-hmm.
Once you combine these two, we get the trend and the direction of the market. So here, when it came to the 800 crossover level, we know
Mm-hmm.
that something is going to happen.
Okay.
Since the previous lows were not taken out
Mm-hmm.
and the price went up a little bit, we assume that the prevalent trend will stay. Now, due to the quantitative easing of the Fed,
Mm-hmm.
where the rates were kept near zero most of the last decade,
Mm-hmm.
the price stayed in a very narrow, flat curve here.
Mm-hmm.
Since 2015-16, there was a lot of talk about the interest rate slowly, the quantitative easing being stopped by the Fed, and subsequently in 2017 they actually did stop it and started increasing rates a little bit.
Mm-hmm.
Since then, the price has shown a lot of movement. It broke the previous lows of 2010-11.
Mm-hmm.
Indicator also broke that low,
Mm-hmm.
started going down, and we
Mm-hmm.
saw the price movement. Now, see, this is a 2 year bill.
Yeah.
In a 2 rupee move in this, sorry, a 2 point move from 110 to 108 is a big move.
Mm-hmm.
The same thing when we reflect it over a 10-year bill or a 30-year bill,
Mm-hmm.
moves are very large. For
Okay.
instance, with your permission, I'll go to the next slide.
Yeah, go ahead, please. You don't need my permission.
This is the 2 year treasury, 10-year treasury bill.
Yeah.
Now, if you see the super indicator, this has got its own super indicator.
So just 1 second. Now here we are referring to an inverted scale, right? So if that cuts down, that
Yeah.
means it's going to get bullish and vice versa.
Yes.
Right.
So here it came near the trend line, the crossover line 800.
Yeah.
Subsequently,
And
that
then we had a spike.
that was the lows of the market. We knew something was going to happen. Either the trend was going to continue down drastically, or
Mm-hmm.
it was going to reverse, and it did reverse. Similarly, in 2016-17, it came after almost a decade. It came back to the crossover level and
Mm-hmm.
above it. And we
Yeah.
already know what damage it has done to the price of the 10-year bill.
Yeah. Now, now I'm going to come back to the period, which is the earlier circle that you have done,
Okay, of
the
2000.
last but one. And prior to that, the line has gone to the 800 level, I think 3 or 4 times.
Yes.
So can you share with us your findings out there? Does it still confirm to that?
Yeah, yeah, of course. For instance, the first time it came here, as I said, there
Yes.
could be a trend line breakout or a previous low breakout.
Okay.
So every time it came here at the crossover, it said there's going to be higher volatility
Yeah.
and there might be a change of direction.
Yeah.
But it did not take out the highs.
Okay.
So it had to come back.
Mm-hmm.
Now, here, if you see, the price did not take out these lows. I mean, there's another indicator which goes on this, which has to be worked along with the super indicator.
Okay.
It is, we will show it in the later charts how it works. So, as long as that price has not been taken out,
Mm-hmm.
we don't go against the trend, even though a
Right.
super indicator shows that it might change.
Yeah.
Thing is, when we see it on the super indicator going to the 800 level, we are forewarned. Now,
Mm-hmm.
a treasury bill, it might take years for it to work out.
Mm-hmm.
As long as our price levels are not taken out,
Mm-hmm.
we don't change the direction of our trades, but we
Mm-hmm.
are alerted well before the price actually does that change.
Okay.
Time it comes to zero, we think there's going to be a huge move coming. It doesn't.
Yeah.
Finally, it breaks out in 2006,
Mm-hmm.
where the price also breaks out here
Mm-hmm.
level. Can you see here? The
Yeah.
four lows were taken out,
Mm-hmm.
and the price went down a little bit, and then it went sideways for 2 years.
Mm-hmm.
And by that time, the indicator also came back down below the 800 level.
Mm-hmm.
We had a price breakout at this point. So even
Yeah.
though this fall did not give us much in terms of gains,
Mm-hmm.
it prepared us for this large move coming later.
Mm-hmm. Okay. Can we go on to the another chart?
Okay, so what I want to tell you is
Yeah.
we discussed the super indicator in terms of the US Treasury bills, 2 year,
Yeah.
10 year, 30 years. It works
Mm-hmm.
across all kind of instruments as long as the market is extremely liquid,
Mm-hmm.
widely held,
Yeah.
and generally, I mean, whatever else goes along with it.
Yeah.
Now we go to now. How is this super indicator relevant to us as traders, investors, or market professionals?
Okay.
Let's get down to our country level.
Mm-hmm.
Here we have the super indicator in the middle, marked in orange.
Yeah.
This is the price chart.
Mm-hmm.
Now, since this is the NSE's banking index,
Mm-hmm.
it is a equity linked product.
Mm-hmm.
There is higher volatility.
Mm-hmm.
The ranges are very high. I mean, monthly high low range or whatever, weekly or even on a daily basis.
Mm-hmm.
So there are a lot of whipsaws in the market.
Mm-hmm.
Here you can see this indicator going up and down, up and down.
Yeah.
So it is in a trending way, but still it crosses over on either side of the 800 level quite a few times.
Mm-hmm.
To smoothen this out,
Mm-hmm.
we have made an MACD of the indicator.
Okay.
So even though our primary indicator is the super indicator,
Mm-hmm.
the MACD of the super indicator to get long-term trends and directions of the market.
Mm-hmm.
For instance, here in the banking nifty, when the MACD goes above the zero crossover,
Mm.
mind you, just to remind everyone that the super indicator works in inverse to the price.
Okay. Reciprocal.
Indicator breaks on the upper side, the price will break down on the lower side.
Yeah.
Okay. So the MACD when it goes above the zero crossover level,
Mm-hmm.
with a break of the trend here,
Mm-hmm.
get large drawdowns in the market.
Mm-hmm.
Last 10 years, as you can see, there are only 5 times that the MACD has crossed over.
Yeah.
One, two, three, four, and currently. And
Yeah.
all the four previous breakouts on the upper side have led to a severe fall in the market or
Mm-hmm.
2013 a sideways market.
Mm-hmm.
Now, how this works is the super indicator is based on the price moving
Mm-hmm.
in a certain way, which,
Okay.
which is shown in the next slide.
Okay.
Now,
Now,
this is
Ketan, just go back. I have a few questions on this.
okay.
Okay. Isn't the signal coming very late? So how do you? So the first indicator, if I go to 2008,
Yes.
I thought the fall came very late.
Yeah. So what happens is this is the monthly chart.
Yeah.
So the super indicator, we will have to wait for the month to get over
Uh-huh.
for the actual reading of the super indicator.
Okay.
So in 2008, we got our reading in probably March or Feb March
Mm-hmm.
when the market had already fallen 15% from the highs, 10-15%.
Okay.
But what happens is we have a holistic view monthly wise, we
Mm-hmm.
narrow it down to weekly,
Mm-hmm.
and for our actual trading, we narrow it down to daily.
Okay.
So in the monthly, we get a very
Mm-hmm.
long-term trend.
Mm-hmm.
For instance, in 2008, we might have got the long-term trend in maybe Feb or March, but in the
Mm-hmm.
weekly, probably it would have shown us in Jan itself. that there's something wrong with the market, because then as our weekly charts get updated, there are 4 weeks in a month. So
Mm-hmm.
we don't have to wait for 31st March for the monthly chart. Maybe in the weekly by 15th March, we already know that the super indicator has given a sell.
Yeah. So
Plus,
if we go to the weekly chart now, what do you see? Or we go to the daily chart?
okay, let's finish with this basic introduction to super indicator. Or
Yeah.
for instance, even though this is a monthly chart, the signal comes a little bit late. The
Mm-hmm.
time of the signal means the duration for which it lasts.
Yeah.
The price damage or upside it does is still
Mm-hmm.
worth looking at the chart on a month-wise basis.
Okay.
Okay. So for instance, this March signal, even though it might have come at a 10%, 15% drawdown, the market went another 15%, 20% down after that. For
Yeah.
here, it came very close to the highs, maybe 5, 7% in 2010, 11. Now, how
Yeah.
do we use this for our trading long term and short term both?
Mm-hmm.
The super indicator is derived from a very specific setup of the price bars, which we will show in the next chart. I will come back to the weekly and the daily breakouts. Let's just get over with this.
Okay.
Okay, now what we see lower at the lower part of the chart is the Bank
Mm-hmm.
Nifty COC. I call it change of color or change of course. As you see,
Yeah.
you can see just white candles, usually white candles mostly on an uptrend,
Mm-hmm.
black on the downtrend.
Yeah.
It looks very similar to the price chart which is shown above,
Yeah.
but it is not so.
Mm-hmm.
It will be more clear once we see the next slide. But just understand here that the super indicator is derived from this banking nifty COC,
Mm-hmm.
and it is very different from the price chart, even though it looks the same,
Mm-hmm.
which we will make it clear in the next chart. Now that same banking nifty chart is overlapped on the banking nifty COC chart here.
Okay.
Now the price charts is shown in the green and the red bars.
Mm-hmm.
Original COC stays the same, the white candles and the black candles.
Okay. So you're merging both the charts.
We are merging both the chart because that is
Yeah.
how we use it.
Okay.
Every
And what I notice is that in a up market, the green bars are above the white bars, and in down market, the red bars are below the black bars.
excellent, and that is how.
So
Yeah.
yeah, so this black is kind of serving as a resistance zone, and
Yes.
the white candles are kind of serving as a support zone. Am I
Yes.
right in that?
Absolutely right. That is exactly how we use these bars to trade. As you
Okay.
see, every time the price is in an uptrend, the
Mm,
COC bars are usually white and they get larger or smaller depending on the market moves. How do we use it to trade? So every time, mind you,
mm,
this is a monthly scale.
okay.
The same can be seen in a weekly or a daily scale. So every
Mm-hmm.
time the price comes to the lower end of these white candles,
Mm-hmm.
you have a very uh, low stop loss entry in the market,
Mm-hmm.
because it usually never breaks this white candles on the lower side in an uptrend.
Okay.
It might go sideways.
Mm-hmm.
It might give a small breakdown on the lower side, but as long as a super indicator has not given a sell
Mm-hmm.
or the trend line has not been broken, it is still a valid buy. For instance, here this candle turned black a little bit,
Mm-hmm.
but it was a sideways market. The super indicator was at the crossover level, it had not given a sell,
Mm-hmm.
and the market had not broken our support levels nor its trend line. So it was a very
Mm-hmm.
low stop loss entry in the market.
So, Ketan, tell me one thing. You
Yeah.
know, just like this is working like a parabolic SAR, right?
Yes.
So, the difference between a parabolic SAR and your COC indicator,
Yeah.
what is the magnitude of the difference? Is it even more tighter than a SAR?
Actually, I haven't made that comparison.
Okay.
As far as I can tell, regarding my indicator, that
Yeah.
this is the, mind you, this is the monthly chart. When you come
Yeah.
up to the weekly and the daily,
Mm-hmm.
it it kisses the white candles or the COC chart more than what can be seen here. So
Okay.
basically, both of them tag along together.
Mm-hmm.
And as you said, if I may use the word, it tags along very tightly with very low breaches on the lower side in an uptrend and very low breaches on the higher side in a downtrend.
Mm-hmm.
I hope that answers your question a little bit.
Yeah. So my questions are coming from a trader's mindset. So what do I do near the white line? Should I buy?
Of
Can I
course,
add positions?
you can buy, you
So
can,
can I pyramid there?
yeah, you can either take your first entry there, or if you're already in the market, you can add substantially to your positions,
Yeah.
because for your new position, your stop loss level is very close.
Mm-hmm.
And of course, this is one of only one of the features of the super indicator. It also tells you when exactly the large move is going to come.
Right.
At point of time, you can really add substantially or maybe even pyramid your positions because your stop loss levels are very low.
So now coming back to the pyramiding part of it,
Yes,
uh, does the price when you see when you have an uptrend
yes,
and you have the white candles,
yes.
does the price penetrate the white candles ever?
Of course, it does most of
Okay.
the time.
So
Uh,
does it go lower than the white candle?
no, it does not.
Okay. So if it goes lower than the white candle, then something is seriously wrong with the price. It may reverse.
Then we look at the super indicator, we look at the trend line.
Yeah.
See what happens. There are two things here to consider. When
Hmm.
trend has actually started,
Yeah.
the white candle will never be penetrated.
Hmm.
Its lows will never be taken out, and the sizes of those candles will be big.
Okay.
Okay. For instance, if you take this 2009-10 period, 9 10 11, in 2009,
Hmm.
somewhere in April, we must have got a super indicator buy for change of trend and everything. And
Hmm.
these candles of March and April, they are so big,
Hmm.
you will not see the price ever going down below the white candles, the lows of the white candles.
Hmm.
And after that, the market went up to touch the previous highs of 2008. Can you see this in end of 2009 and early 2010?
Hmm. Yeah.
During this whole rally, all the candles were quite big, white, and the lows were never taken out.
Hmm.
Now you know that you already had a price trend.
Hmm.
It went up substantially from where it was before.
Hmm.
Obviously, maybe due to mean reversion, or maybe here in this case, a double top being there. We know that there has to be some time or price wise correction.
Hmm.
Hence, we see candles getting smaller of the super indicator, COC candles.
Hmm.
And there isn't much. Even though here we can see in 2010 Jan, maybe the price is breached on the lower side. There are
Hmm.
two, three things to consider. A, the candle is very small. B, it did not take out the December or the November white candle lows.
Hmm.
There was no indicator in the super indicator that a large move is coming.
Okay.
Only when it went sideways for a few months, that we get a breakout in terms of the COC candle becoming bigger, the price being at the trend line, and the super indicator giving a buy. Once again, where you can add, you can pyramid, or you can just enter the market for the first time. Every time you see in the middle, the candles become small and the market either corrects a little bit price wise or time wise. But the
Okay.
main trend does not change. See here in 2016, late 2016, 17, it went sideways.
Okay.
For the black candle, it was pierced in intra week or intra day, but it never
Hmm.
closed for it. And of course, there, I mean, with a lot of other readings, it did not. This was not a sell. But what I'm trying to tell you is went sideways here. It went sideways in the middle of 2014. In middle of 2010, it went sideways. 2007 beginning, it went sideways. All this time, the candles got smaller. The price kissed around the candles, did not break the main trend line, did not break the previous low of the candle. So we were right there in the uptrend, and we got another opportunity to participate in the rally which was upcoming. Does that answer your question regarding the candles?
Yeah.
Okay, so let's move on to the next slide. So in this slide, let me just repeat. We overlap the price chart on the COC chart. Every time the price came to the lower end of the COC chart, we had a low cost entry to the market as long as the previous trend was maintained. Now we go to the next slide. Now, as you said last time when you asked me how to use it in your trading system,
Mm-hmm.
this is the same thing on a weekly basis. Now, as you see in 2014 year, April, uh,
Yeah.
when we got a buy in terms of the super indicator, the candles getting bigger, we had a price breakout, everything happening the right way. The market went up for 3 continuous months till June, July.
Okay.
The size of these white candles, they got bigger and bigger and bigger, showing tremendous strength in the market.
Mm.
Then, obviously, because of the percentage rise in the market in such a short time, the price getting too far away from its candles, we had a sideways market. And we had small drawdowns also from the high, but never it broke the white candles. Can you see this in July, August?
Yeah.
See a red bar, but it is well above the lows of the white COC bar. And it kept on doing it for at least 6 months. It went up, made a small high, then came back to the chart. Again, it took support on the candle. And finally, in November or December, it gave a breakout.
Okay.
This is how we use the COC candle bars. As long as it does not break the trend line of the candle bar, as long as a super indicator is still in buy,
Mm-hmm.
whenever it comes close to the lower end or even in the middle of the candle bars, we have a low cost entry to the market. And as you see, the candle bars in an uptrend will not change its color. Yeah, most of the, in fact, 99% of the candle bars are white. In this
Mm.
downtrend, all of them are black except for a couple here, which again, we, after using our filtering indicators, this would have not given us a buy. It is just telling us that there's a sideways correction or time wise correction happening in the market.
Okay.
Once again, let's take the most recent example. In 2017, when the market broke out in March, April, you see larger candles forming. And
Yeah.
next 6 months, it just came to the highs of the candles and started rising. The trend was that strong. It didn't even come inside the candle. It just stayed about the candle all the time. So it was such a strong move.
Mm-hmm.
Now, what happens? After this move, the market went sideways. As you can see, once again, it did not break the low of the candles, but the candles became smaller, flatter, and the prices started coming inside the candle a lot more than what it used to previously. Do you see this?
Mm-hmm.
Now, if you go back to the monthly charts, during this time, we would have the indicator loitering around the 800 crossover level, October November period. Okay, I'll show you here.
Yeah.
I've gone back to the monthly chart. This is October November when it is right near the 800 crossover level. Do you see that?
Yeah.
So what it tells us that there is a large move coming. There is
Mm-hmm.
going to be increased volatility,
Mm.
and if the trend line is taken out and it adheres to the other filters that we use, we might get a huge up move or we might get a change of direction. Now, as we all know what happened, let me get back to the weekly chart. Yeah.
Yeah.
As we know, this is the October November period when the indicator came to the crossover level.
Mm.
It did not break the lower candle. And in November, you see the candle started getting bigger a little bit.
Mm.
So, with the stop loss of this lower candle, we knew that the uptrend has resumed.
Mm-hmm.
Are you getting me?
Yeah. Yeah. Yeah.
We all know what happened in December and Jan. The market just spiked.
Hmm.
And of course, once when the lower candle was taken out, we had an exit from the market, which was in first week of February. In the weekly charts, it would not be shown, but in the daily, if you see,
Hmm.
the levels were a stop profit level
Hmm.
were very close to the highs, probably around 26,600 or 26,700 levels.
Okay.
So once again, in December, this is the monthly chart. In December, Jan, it came to the crossover level,
Hmm.
it spiked up, then it went down again in February.
Hmm.
We had a black candle forming in the COC here,
Hmm.
which was taken out on the lower side.
Hmm.
Sorry. Yeah. But it stayed on the trend, uptrend, the green line.
Hmm.
We were already forewarned that something is up with the market.
Hmm.
So since we got a black candle, since we're on the uptrend still,
Hmm.
there are only two things can happen. Either market will play around here, it will have a time-wise correction,
Hmm.
or we might have a lower breakout if the low, this black low is taken, this March and April black bars are taken out.
Hmm.
Let's go back to the weekly chart. Can you see this?
Yeah.
We have these white candles now getting larger in June, July.
Yeah.
Price is above it. This
Hmm.
green chart, but we don't have a breakout of this purple line and we don't have breakout of this brown line. Now
Yeah.
it might seem that we are at a fork in the road as to where the market wants to go.
Hmm.
We have to read our indicators now on a monthly, weekly, and daily basis.
Yeah.
Monthly, market has already shown that it is at a inflection point,
Hmm.
which was shown by the volatile move in Jan upwards and in February downside.
Hmm.
Now, in the weekly chart, we see white candles forming,
Hmm.
price moving up with strength, but it faced resistance in the purple line. Now, what
Okay.
is the super indicator telling us in the weekly charts,
Hmm.
which is here? The super indicator went about the 800 level in February, in the beginning of February. That means the market might see a downfall, which obviously
Hmm.
it wrong. And it came back below the 800 level.
Yeah.
The market moved up above those black COC like candles, but
Okay.
super indicator has not given a buy because it is still not broken out of its triangle here. It has to break down below this purple so the price can break above the purple. See, the super indicator works inverse to the price. Hello, Vinit?
Yeah. Go ahead. Go ahead.
Okay. So when the super right now the super indicator is still in its bearish mode,
Hmm.
it has not given us a buy. And as you can see, neither has the price. So we,
But in the chart above, super indicator is below the 800, right?
yeah, but we have to also use the super indicator whether it is trending or not. See, as I told you before, this is a super indicator on the price of an
Hmm.
equity based index.
Hmm.
So there are a lot of whipsaws, there are a lot of false moves.
Where is the false move?
No, no, in the formation of the indicator, it goes up and down. No, see here, it goes
Yeah. So,
up.
so if
Just
I'm looking at the MACD of the super oscillator,
mm,
it is clearly given a buy signal.
yes, here. If you look at the MACD, it has given a buy
Yeah.
signal. But once again, as I told you, there has to be a trend line breakout or a price level breakout.
Yeah.
For banking Nifty, it has to be either its previous high or since it could not do that in May and went sideways, and now we have a proper breakout of this down trend line.
But come with me again. You are saying it's a bearish move, but there is no bearish signal. So you're preempting the move, isn't it?
Kind of, because my indicator has already gone to a certain level in a certain way. See what happens, the indicator also we can draw trend lines on the indicator. Can you see this?
Hmm.
And can you see this lower one?
Yeah.
So the indicator moved within this trend line. The
Mm,
price stayed above its trend line, but
mm,
the indicator had given a breakout in February, March
mm,
above its trend line. That means it's a bearish move for the indicator.
mm,
That means it's a bearish move for the price. Now, normally, this if the indicator comes at 800 level, the price would not have broken this white candle in February.
mm.
Because the indicator went above and gave us a sell, the price had to break these levels. But it got arrested at the trend line. Am I clear about
Yeah,
it?
yeah, yeah.
Now the indicator is still within this triangle. It has to break down below the lows of this triangle for it to give us a real buy.
Okay.
And that will only be shown by a price breakout here at this level. It is almost near the highs. Till that happens, we don't have a buy. Till this
But
low.
if I were to come there and say that the black candles have turned white and they're getting larger,
Yeah.
so isn't that a buy signal?
For people who are hyperactive in the market or who are willing to preempt the super indicator, of course, at the with the stop of the low of this white candle.
See, let me put it this way, Ketan, just hang on here.
Yeah,
See, super indicator gave a buy on
yeah,
the oscillator. The MACD gave a late buy.
yeah,
Black candles converting to white. You're getting larger candles,
yes,
but it is still within the trend.
yes,
But still, it is saying that the price trend could be bullish, isn't it?
yes, because of these white candles.
Yeah.
And the indicator has come down below the crossover. See, it has not broken its trend line, but it has still come down. So there's a low stop profit entry here at the lower ends of these candles,
Yeah.
which you have seen a lot in the last 1 month. The price has come near the candle or in between the candle and again gone back to its recent highs. It's
Mm-hmm.
a low cost entry to the market. I think the lower end of the candle may be around 25,600. So
Mm-hmm.
round it off to 25,500 with a stop of that. You have a continuous uh, entry in the market at maybe a 500 or 1,000 point stop loss. But let's move ahead and do a little bit more fine tuning in the Bankly weekly chart.
Mm-hmm.
I'm not taking HDFC Bank or Kotak Bank because they have a huge weightage in the banking nifty, and already they are trending with higher highs and lower lows since
Mm-hmm.
1.5 year. But we will take, and neither will I take the PSUs because I mean, we all know what happened with them. We'll take the most important one other than HDFC and Kotak, and that is ICICI Bank.
Mm-hmm.
Okay, this is the monthly chart of ICICI Bank.
Mm-hmm.
This is the MACD of the super indicator.
Yeah.
Now let's see. First is let's correlate how the super indicator is working on ICICI Bank.
Mm-hmm.
So every time the MACD is broken above the 800 crossover
Yeah.
with the break of the previous lows
Mm-hmm.
here, ICICI Bank has shown large moves in the market. Post the super indicator giving us a certain signal. In
Mm-hmm.
2008, we had a huge fall. In
Yeah.
2011, once again,
Yeah.
the indicator showed us that there was a sell. It took out this low at this red bar,
Mm-hmm.
went out substantially.
Mm-hmm.
2013 also it went down, even though it was only a 2 month move, but percentage wise it was probably a 20-25% move.
Mm-hmm.
2015 again it went down. Now,
Mm-hmm.
mark here that in 2015 the banking nifty had not gone down that much.
Mm-hmm.
ICICI Bank must have gone down probably at twice the speed or thrice the speed of what happened to banking nifty.
Yeah.
Once again in 2018 we have a clear sell in ICICI Bank with a clear breakout of its uptrend line,
Mm-hmm.
and hence this is the monthly chart, mind you, and hence
Mm-hmm.
once we look at the individual components of the banking nifty, we get a sense that maybe Our bias maybe has to be more on the downside once ICICI Bank takes out this recent low.
Okay.
I hope that was a little bit.
Yes, Ketan, it seems to be a very, very promising discovery that you have done, giving huge moves.
Yeah,
And these moves are very, very long term and large moves that are we are getting.
absolutely.
And I believe that we should track this indicator more closely. And let's work together to evolve a trade setup which we can provide to our viewers and uh, take it forward from there.
Absolutely. You are. I just would want to make one observation here in ICICI Bank.
Yeah.
If you see, there are this green horizontal bars, green and red,
Mm-hmm.
repeated once every year.
Mm-hmm.
Now, what are these? What I am
Okay.
saying is ICICI Bank has a very seasonal move in the market.
Mm-hmm.
In July or June, July, whenever ICICI Bank has taken out its previous highs, previous month's highs, or the low,
Mm-hmm.
it has shown direction and large move in that direction. For instance,
Okay.
here in 2007 in July it breaks up,
Mm-hmm.
we have a large move.
Okay.
In 2008 it broke down, we have a large down move.
Mm-hmm.
All 3 years post June, ICICI has shown large moves in the market. Probably, I don't know, it's a very seasonal factor. It is very particular to ICICI Bank. And once again, in 2018, we have the lows of April, May, and the highs of April, May at 300 and 270 low high. And
Mm-hmm.
either one of these are taken out, we will have a
Mm-hmm.
very large move in ICICI Bank coming. Now, my buy
Okay.
is to the downside for two reasons. The super indicator has also given a sell, and the price has over a 3 month period broken its main uptrend line.
Mm-hmm.
So if we get a lower breakout, I think, and which stays for a couple of days and meets all our criteria, all our filters, then I think
Mm-hmm.
we will see ICICI Bank. I mean, sorry if there are any people who are long in this stock, we might see a level of maybe around 200, 225
Okay.
over the next couple.
But I would like to point out a disclaimer out here that whatever Ketan is saying is only purely hearsay. It is not a recommendation to buy or sell the stock. And we are presenting this only for viewer information,
Of
where we are discussing a super indicator which has been developed by Ketan.
Of course, as Vinit said, I would repeat the same disclaimer. This is just for information. We want to share our knowledge and bring it out to the world. And it is in no way a recommendation to trade a specific stock or a index. People should do that with consultation with their own advisor
Chartered financial analyst.
and analysts.
And Ketan, you do not hold any position in the stock either, I guess.
Yes, disclaimer again, I have no skin in the game. For instance, I don't trade stocks much.
Mm-hmm.
95% of my positions are always in Bank Nifty or NSE Nifty 50.
Okay, so right now you don't have any position in ICICI Bank.
Not at all. I just use this charts to collaborate my larger views.
Okay, great. So that was awesome having you on the show, Ketan. And people who are interested in uh, more information on the super indicator, you can contact ketan.v.gohil@gmail.com, or you can get in touch with me at schoolofmarketstudies@gmail.com, or you can even WhatsApp on 7021216247. So we have run out of time for this show, and it was great having Ketan on the show. And next Monday, we will meet again and we will look at intermarket analysis of Nifty, Bank Nifty, and all the other sectoral indices. Thanking you. I am signing out. This is Vinit Bolinchika for the QFT show, and I will see you again next week.
Thank you. Thank you, Vinny. Thank you, everyone.